All right, good morning, boys. We are getting into the most important discussion for our syllabus, right? Yes, the one important discussion which carries the most weightage in your exams. We are looking at what is called as your comprehensive questions, or if I have to put it in your exam terms, your computation of total income. Yes, this is your compulsory question number one, which carries almost about 14 marks, but yes, people, the intention of this chapter is not to conquer your 14 marks alone, because whatever you discuss here will also be impactful for your other questions. Yes, your other questions will also have headwise related incomes, and therefore this question will answer that also. Yes, so we're going to look into this comprehensive questions as if you're doing exams, people, as if you're doing exams. Try to tackle everything as we read it for exam purposes, and then we'll try to see what we can do better. Yes, two things which I want in your hand, people, as we keep doing this thing. One is a pencil. Yes, as we keep discussing, we'll be marking some things in the pencil so that we know what you have to take care of. Yes, so first thing I need is a pencil. Second thing is, for your reference, a highlighter. In case you thought in your head that this is right, but I told you the answer is different, you are going to mark it down. You're going to mark it down so that you can do it better for the next time. Yes, so two things you need in your hand, people. From an exam standpoint, that is what I also recommend. Yes, the 15 minutes preparation time which you get, I think we discussed this earlier. The first 5 minutes is for you to look through MCQs, not the case study, but the normal MCQs. The next 5 minutes is for you to decide which question to ignore, and the last 5 minutes is for you to quickly go through your comprehensive question to see what changes you can make. Yes, so we are in that last 5 minutes, people. We are in the last 5 minutes trying to answer what happens in the question, make some notes, plus and minuses, so that when you start computing, you already know the answers. Yes, so we're going to do that, people, and therefore at that 5 minutes juncture, you don't have a answer sheet in your hand. The only thing which you have is a question paper and a pencil in your hand. So you're going to take that pencil, you're going to take your question paper, make some adjustments as to what should be plus, what should be minus, what should be plus and what should be minus. That is what the whole intention is, people. Yes, we have a handful set of questions, people, a good set of questions which is there, some from study material, some also from your past exams. The ones which I felt difficult from past exams have also been handpicked. We're going to discuss all those questions in today's class. Questions where I feel it is better we write down, we will also write down in the complete exam template, meaning along with notes, along with adjustments and all those things, so that you also get an idea of how you should present your papers. Yes, we have done a bit of an understanding on that when we did PGBP chapter already, but we'll again do it so that you get a better reference, because this time we now have computation in all income levels. Yes, that is what the understanding is, people. Good enough for us to go today? Yes, great. What we're going to do, people, we're going to look at the question. I'm going to read out the adjustments. You're going to look at each word carefully, and you're going to try to understand if that word has an implication. If it has an implication, you'll mark there, and then we'll start brainstorming as to whether we should look into the word or we should ignore the word. That is what we're going to do. Yes. On that note, people, we're starting with question number one. Always rule number one, as I spoke to you when we started golden rules itself, people, never get into the question unless you know what is the requirement of the question. So always read the first line. If you get it in the first line, great. If you don't get it in the first line, move to. Let's do that. Yes, question says there is a company called XYZ Limited and is engaged in the manufacture of textiles. People, the moment I see the word manufacture, something strikes. I have additional depreciation coming in, provided the question says I am not going for special tax regime. If I'm going for special tax regime, then I will have an option to choose 115 BAA or BAB. But the problem is the question says the manufacture is happening from 2009, which means I can only do BAA. Yes or no? Yes. The statement of profit and loss is showing up net profit of rupees 700 lakhs after debiting and crediting the following items, which means whatever items are now given are already taken care of in the P&L. Now you should decide whether it should be there in the P&L or it should not be there in the P&L. Before we get to that, people, do I know the requirement of the question? I am moving to the last line. It says compute the total income and the tax payable ignoring MAT provisions and 115 BAA also, meaning they want total income and tax payable but as per normal rules. Now the problem with normal rules, people, because they have asked for tax payable, I also need to know what is my tax rate. Which luckily is given in the next line. It says turnover is 405 crores. I can only have turnover up to 400 crores, meaning this becomes a tax rate of, so I'm making a note here that this is to be taxed at the rate of 30%. Yes or no? Yes. Done with that, people. I am now going back on the top. If you notice carefully, people, on the top, I have two things. Some things given from 1 to 11. These are all items which are already there in the P&L, and then there is something called additional information. Items in additional information are normally not part of P&L unless the question says they are part of P&L. Yes, let's keep that very clear in your heads, people, because one mistake from additional information side, you may end up making those marks. you may end up losing marks. So let's not do that. Yes, looking from the top, the first item comes and says depreciation which is calculated based on useful life of the asset as per the provisions of Companies Act is 50 lakh rupees. I have booked the depreciation in my P&L as per Companies Act. People, income tax says do it only as per income tax, therefore this amount is to be added back. So I am putting a plus and a P. I am putting a plus and a P. Plus and a P means add in PGBP. Add in PGBP. That's my plus and a P. That's my plus and a P. Why am I doing that, people? Because some items may get reclassed to other heads. In that case, I'll put plus and a minus in a P and plus in another head. Yes, so that is my understanding reference. That is my understanding reference. Then employer's contribution to EPF is of 2 lakh rupees and employees contribution of 2 lakhs for the month of March were emitted on 30th June 2025. People, PGBP chapter comes and says when it comes to PF, two contributions are there. Employers, employees. Employers contribution should be paid on or before ROI due date, and employees contribution should be paid on or before PF due date. On or before PF due date. Looking at employers contribution, people, employers is of March, can be remitted by 31st October. I have remitted on 30th, which means I have done everything properly. Expense showing in P&L is correct. It is already there in P&L. I don't have to do anything, which means employer gets ignore. Employer gets ignored. Agreed? No. People, it's already there in P&L. It should be there in P&L. Therefore, I am ignoring it off. Coming on the employees contribution, people, month of March should be remitted by 15th of April, 20th of April, no matter what you remember. Point is here it is happening 30th of June. Income tax says if employees contribution is there in the P&L, it will be considered as a part of P&L because it is deemed as an income, and that too permanently. People, income tax says it should be there in the P&L. It should be there in the P&L. This is already there in the P&L. Therefore you will ignore again. Because people, this is employees contribution. Is already there in the P&L. Income tax also says let it be there in the P&L because it's an income, and therefore ignore, unless you make an assumption that the employees contribution was debited to P&L. If that assumption is made, then what will happen? You will disallow the expense and then add an income. People, how do you decide in this question now whether it's an expense or an income? How do you decide whether it's an expense or an income, people? If you notice, the top comes and says after debit or credit of following items, meaning either of the two can happen. Unless they say debit, then I would have told that is the answer. But because it says debit and credit, you now have to think from an accounting standpoint. From an accounting standpoint, people, employees contribution you have received or you have paid. Employees contribution you have received or you have paid. You have received it from employees and then paid to the government. So when you received it, you would have credited to P&L. It's showing as income. Correct? No. It is showing as income. People, when did you receive? In the month of March. So in the month of March, you credited. In accounts, what you would have done? You paid it in June. So in the June only you would have debited. I am in March. For the month of March, it is showing received. For the month of March, it is showing received, and income tax also says received, and therefore ignore the information. Agreed, not agreed? People, you have a choice in exam. You can also make an assumption and come and say employees may have been debited, which is a wrong entry, which has to be first reversed. Therefore, first reverse 5 lakhs. Because it is now paid late, also add 5 lakhs, which means net effect add 10 lakhs. Net effect add 10 lakhs. From my perspective, people, most logical sense, ignore it off. Because I would assume that employees is credited in the P&L. People, this is something which very commonly happens in ICA exams, especially at final levels. ICA would give you weird assumptions. Yes, at this point of time, understand the fact that don't overthink it, because ICA knows they have made a mistake in the assumption process, in which case whatever you is correct, whatever you write is correct. So whether you do plus 10 lakhs or you do 0, answer remains the same. It doesn't matter. You will get full marks for it. Yes or no? Any doubts on this? Are we good to go? Yes. When did they pass the debit entry? When did they have passed the debit entry? March or June? Understand this carefully, people. Employees' contribution. Are you paying from your pocket? You're going to collect from employee. When you're collecting, what is the entry? Credit entry. Yes. Then you're going to pay this money. When are you paying this money? 30th June, which is this year for next year. Next year, which means your receiving entry showing in March, your payment entry showing in June. You are providing books for March. In the month of March, it is showing in credit. In the month of March, it is showing in credit. That is what income tax also wants. Therefore, entry gets ignored. Next year, what will happen? You will show debit. I will say what? You can't do debit because it is a permanent income and already offered earlier. Therefore, this will get disallowed. This will get disallowed only in the month of June, people. That's where the whole accounting process makes an impact. Yes or no? Had these two happened in the same year, what would have come and told? Credit is also showing, debit is also showing, P&L shows 0. In that case, I will come and say delay happened and therefore you have to add back 5 lakhs. You have to add back 5 lakhs because there is a change of financial year. People, accounting difference makes an impact. Yes or no? Yes or no? Yes or no? Yes or no? Yes? Think that thoughts. Next. The company has appended a note to its income statement that the industrial power tariff concession of rupees 2.5 lakhs, which was received from state government, was credited to the P&L account. Reading the lines, people, what is happening? I have received some money from government, which is nothing but grant, which is nothing but a grant. People, grants received from government to be put in the P&L unless it is relating to a capital asset. Nothing given in the question. Assume it is revenue grant to be there in the question, says it is. Therefore, simple. Yes sir, yes sir, yes sir. Next, the company has provided an amount of 25 lakh rupees, being the sum estimated as payable to workers based on an agreement to enter with the workers union towards periodical wage revision once in 3 years. The provision is based on a fair estimation of the wages and reasonable certainty of revision in 3 years. So people, what is happening? I'm planning that I should change my salaries of my employees, and therefore I've done a provision analysis. Now here comes the question. When it comes to employees, people, the first thing which gets triggered in PGBP is making sure that the payment happens on time. Section 43B. But think about 43B very carefully. It talks about only certain items of gratuity, bonus, commission, leave encashment, any contribution to funds. Look at these 5 items and tell me, is it part of that? No, which means this is not part of 43B. If it is not part of 43B, people, payment on time, mandatory, not mandatory? Not mandatory. No mandate on payment on time. Now you have done a provision. Therefore, I look at ICDS 10. Provisions. ICDS 10 comes and says any provision unless it is unascertained, like bad debts will get allowed as deduction. This is a provision on a fair estimate. Normal course of business, and therefore ignore. This is a part of ICDS 10 and therefore gets ignored. People, if the same question would have said that instead of doing provision for wage revision, I would have done provision for gratuity, I would have disallowed, because 43B will come and say provision created is fine, but you should have made the payment, which you did not do. So on delay of payment, I would have disallowed under 43B, but on provision basis, I will keep it as deduction because there is a section called 40A7. Yes or no? Yes. So when it comes to provisions, people, ask yourself whether it is 43B triggered. If yes, then it is disallowed. If it is not, then you allow it as deduction unless it is provision for bad debts, which is under 36. Clear? Yes. Provision for is based on actual evaluation. It is, which is what I'm saying. So 40A7 will allow it for you, but the problem is 43B will get triggered, because 43B will come and say, even if you have done it based on fair estimates, have you made the payment? If you have not made the payments, then 43B will come and say you have to allow it in the year in which. So which means whether one section gets allowed or not, the second section overrides it and therefore you get a disallowance. Here luckily because 43B did not get triggered, therefore it got allowed as a deduction. Agreed? Yes, yes, keep that thought in mind. Next, the company has made a provisions of 10% of its debtors towards bad and doubtful debts. Sundry debtors of the company on 31st March is 200 lakhs. People, I am trying to make a provision for bad debts. This is triggered by section 36. This is triggered by section 36. My debtors is showing 200 lakhs. I've made a provision of 10%, which means I've made 20 lakhs. This 20 lakhs is not to be allowed as deduction, already showing in P&L, therefore disallow. So I am doing plus in PGBP. I am doing a plus in PGBP. Correct? Correct? Yes. Point number 6. A debtor who owed the company an amount of 40 lakh rupees was declared as insolvent and hence was written off by debit to the statement of profit and loss account. People, there was a debtor who has been treated bad debt. I have written it off in the P&L. People, rules of bad debt, I told you have to follow two conditions as per accounting standards. You have to first offer the income earlier. You have to then write off the debt. People, income offered earlier because it is debtor. You have also written off the debt. Both conditions are satisfied. Bad debt rule comes and says you can claim as deduction. P&L says it is. Therefore, simple. People getting the hang of it. Can we go forward? Yes. Sundry debtors include an amount of 50 lakh rupees which is payable to A and Co. towards supply of raw materials which was remain unpaid due to quality issues. So there was a sundry debt creditor which I had to pay, but I did not pay. An agreement has been made on 31st March 2025 to settle the amount at a discount of 75% of the outstanding. The amount is waived in the statement of P&L account. So I was supposed to make a payment, people, and for that payment I created a creditor. Obviously when you create a creditor, you would have passed the expense entry. That creditor was not paid. Now they're coming and saying the amount which was unpaid, in that I am deciding that I will only pay 75%. In that I have decided to give a discount of 75%. Balance 25 alone is what I'm going to pay. People, balance 25 you're anyway going to pay balance sheet entry. But the 75% which you're not going to pay is a discount or a reversal, which means discount received. This is a profit for you. This is a profit for you. People, you already offered the expense. Now you're offering the income. Proper treatment, wrong treatment. Proper treatment, which means it should be there in P&L. Question says it is. Therefore, that's all. Yes or no? Yes. This is one of the favorite things of ICI people. Adjustments will be given. Most of the adjustments to be ignored. The only problem is ignoring does not mean ignoring. Ignoring means writing notes to this. Everything needs a note. For ignorance itself, you need to write a note so that you get marks for it. Don't just prepare one document. In the document, net profit, 2 adjustments, answer over. No marks for it. You need to write every of these items and give a note against it. Yes. Next, the opening and the closing stock for the year was 200 lakhs and 225 lakhs respectively. They were overvalued by 10%. Now, I remember this is something which I gave you in mocks also, and you made a mistake on this. People, understand, they have given you the closing balance, and the closing balance is overvalued by 10%, meaning the number which you have is already after overvaluation. Yes or no? Which means, people, my closing stock is showing how much? 255, which is 110%, and therefore I want 100%, giving me a number of 2.81. 231.81. On the similar terms, people, 200 is 110%. I want 100%. 181.81. People, my stock is overvalued. If opening stock is overvalued, I claimed more expense. If closing stock is overvalued, I claimed more income. So which means whatever is extra in closing stock will be reversed, and whatever is extra in opening stock will be reversed. Yes or no? People, if closing stock is reversed, my profit will come down, and if my opening stock is reversed, my profit will go up. Keeping that thought in mind, people, 255 and the 231 is 23.19. This has to be added or minus? This is closing stock, so I have to minus, so I have to minus opening stock is 200 minus 181, which is 18 point. This has to be plus, this has to be plus added. Yes or no? Closing stock will get reversed, so therefore profit will come down. Opening stock will get reversed, so profit will increase. So it has to be added back. Therefore net effect is minus 5.01. Okay, 5.01, whatever you call it, minus 5.01. So therefore here I will minus 5.01 or 5, as the case may be. Decimal differences. Agreed, not agreed? Agreed, not agreed? People, you need to know what is happening in accounts before you end up in taxation. Without knowing accounts, you cannot do taxation. Not happening. Yes or no? Yes or no? Next, provision for gratuity based on actual valuation is 500 lakhs. Actual gratuity which is paid to provisions is 300 lakhs. Now see people, no, I have done actual valuation, which means provision is certain. But the problem is this is covered under, and therefore I can only allow actual payments. I have claimed 500, I can only claim, therefore I should disallow. Super. Therefore I will disallow 200 lakhs. Yes sir, yes sir, yes sir. Next, commission of 1 lakh rupees paid to recovery agent for realization of a debt. Tax has been deducted and remitted as per chapter 17B of the act. Hey, they are saying commission paid and TDS deducted, meaning everything is done. Therefore, that's all. Yes. Next, the company has purchased 500 tons of industrial paper as a packing material at a price of 30,000 rupees per ton from PQR, a firm in which majority of the directors are partners. People, why am I giving this information to you? This is specified persons. I have made some purchases from a specified person at a price of rupees 30,000 per ton. PQR's normal selling price in the market is only 28,000 per ton, meaning I should have bought it. I paid extra 2,000 per ton. How many tons did I buy? Therefore 2,000 into 500 tons to be added back. Yes or no? Yes or no? This gives me the answer on everything I need from a PGBP perspective. Luckily none of the adjustments are moving to other heads, therefore all adjustments are part of PGBP. Additional information says there was an addition to plant and machinery amounting to 50 lakhs on 10th June 2024, which was used for more than 180 days during the year. Additional depreciation has not been adjusted in the books. So which means they are saying my additional depreciation is pending to be analyzed. Notice the date, people, carefully. This is additional depreciation of current year. Asset is purchased in current year, put to use for more than. Therefore, additional depreciation at the rate of 20%, number becomes 10 lakhs. A to be plus the minus the minus. This is not there in P&L, people. Therefore, I am claiming it now. Coming to the next line, it says normal depreciation is calculated as per income tax rules of 80 lakhs. People have already disallowed accounts. I need to now claim depreciation as per income tax. So therefore, this will get minus. The company has credited a subcontractor an amount of 10 lakh rupees on 31st March 2024 for repairing a machinery component. Notice the dates very carefully. People, this is 31st March 24. Your previous year. So previous year I booked an expense. Previous year I booked the expense. The expense kaga TDS was remitted on 31st December 24. Which means take a step back, go to last year. Last year I booked the expense. For that expense, last year I was supposed to do TDS on or before due date of return filing of last year. Due date of return filing of last year is 31st October 24, meaning last year I would have disallowed. Current year I have paid it on 31st December, meaning current year I will allow it as deduction. Notice payment is of a subcontractor, no information given, assume he is a resident, meaning last year I disallowed, this year I will claim, number becomes, that's all. Yes, sometimes it may also be requiring you to do analysis of last year's and all, people, so be careful about this. Yes, Yes, going on forward. The company has collected 7 lakh rupees as GST from its customers and has paid the same on the due dates. However, on an appeal made, the High Court directed the department to refund 3 lakh rupees to the company. The company in turn refunded 2 lakh rupees to its customers from whom the amount was collected, and the balance of 1 lakh rupees is still lying in current liabilities. People, this is not something which is there in income tax. It's an accounting thing. Notice carefully, people. I have first paid 7 lakhs ka GST, which means when I paid 7 lakhs ka GST, I would have debited to P&L. Normally, you're not supposed to do it, but assuming a debit into P&L, assuming you have debited to P&L. Now, when you went on an appeal, High Court came and said refund back. So, which means I have claimed back 3 lakhs. I have claimed back 3 lakhs, which I should have put in P&L. Notice carefully, people, what they have done. In that 3 lakhs, they have now decided to refund back 2 lakhs. They have now refunded back 2 lakhs, which means 3 lakhs would have come to my P&L, 2 lakhs would have gone out of my P&L. Net effect becomes 1 lakh. This 1 lakh should be there in the P&L. Should be. You have in the 1 lakh put in current liabilities, which means not put in P&L. You have not put in P&L. Hey, you should have put in P&L. You did not put in P&L. Income tax will say bring it in P&L. If you bring it in P&L, P&L will therefore add 1 lakh. Therefore, add 1 lakh. People, I don't know how many of you are aware about it, but GST laws comes and says that whenever you get a refund back, you need to give it back to your customers. I have only given back 2 lakhs, and therefore the extra which I did not give back will have to be offered as income. Rahul, is this a permanent income? Answer is no. Tomorrow when you pay it back, you can claim it as reduction, but current year, since you have not paid it back, you will have to offer it as income. This will be your adjustment for your total incomes. Yes or no? Yes. Luckily, people, in this question there is no other heads, no chapter 6A, no nothing. Direct answer, direct question, just PGBP computations. Any doubts on the question? No. Let's check what the answer looks like, people. Let's try to match. If you notice, they are coming and saying employees' contribution is being added back. Which is kind of weird. Employees' contribution has been ignored. People, employees' contribution, if you technically thought, we told either of the two has to happen. Either you will ignore it off, or you'll add twice. You will reverse the expense and then you'll add it. Here they have only done once, which means they have made an assumption that the employees is not even a part of P&L. And therefore they have done one-way adjustment, which is kind of wrong, people. Tell me why. Because the question starts with the first line saying after debit and credit of the following items, which means all items showing are part of P&L. So doing only a one-way 2 lakh adjustment is wrong. But that is what IC has done. Please don't worry about it, people. From an exam standpoint, you will always receive. You will also receive alternate answers. So it will be right. As long as you make the proper assumptions. So if you come and ask me, I would either put it as 0 or I'll put it as 4 lakhs. Either of the two should happen. 2 lakhs is definitely wrong. Employees contribution becomes 0. Provision, like I told, will be allowed because ICDS 10 permits it. Provision for bad debts is getting disallowed because it is 36. That is only for employer. Should be ignored. Employees' contribution should be remitted on or before of you have paid it on. Delayed it. If you delayed, income tax comes and says, read the lines carefully. It says employees' contribution is part of the P&L. Yes. Now you are saying employees' contribution is part of P&L. My question is part of P&L meaning debit or credit? You don't know because it's employees' contribution. Normally an employee's contribution means what? You will receive money from employee and then you will pay it back. If you're receiving money from employee, you would have credited to P&L and then you're paying back, so you will debit to P&L. When is the credit happening? It's happening in March. When is the debit happening? It's happening in June. I am in March. Have I made the payment on time? Income tax will say treat it as income permanently. It is already there in P&L. I should keep it in P&L. Therefore, I will ignore. Option number 2, you come and say, no, it's an accounting mistake. You actually should have credited to P&L, but you debited to P&L. In which case, you're showing a wrong expense. First, reverse the expense, which means reversal of 2 lakhs, and then I will add an income. So adding of 2 lakhs totally becoming, either of the two should happen because assumption is it is there in P&L. What IC has done is IC has assumed it is not there in P&L. If it is not there in P&L, what happens? Only one adjustment to be added, which is kind of wrong because the question itself says you should debit and credit the following items. Yes. So again, it's an assumption change, people, nothing else. Yes. After that, people, your provision for bad debts gets disallowed. Bad debts written off because it's already in P&L got ignored off. Provision for gratuity got disallowed only because of the fact that did not pay before due dates. Your commission got allowed because TDS is done properly. Purchase of paper is disallowed because you have 48.2. Your GST not refunded is getting added because not paid to customers. Items to be credited. Your grant has been ignored off because it is right. Your discount is already part of P&L, should be there in P&L, therefore let it go as it is. Depreciation is getting claimed because you have disallowed the normal disallowed the books depreciation. 5 lakhs additional depreciation is also to be taken. Sorry, 10 lakhs of additional depreciation is also to be taken. 5 lakhs is being recorded for overstatement of closing stock minus opening stock. And then finally, subcontractor payment getting allowed in the current year because the assumption is it would have been disallowed in the past years. You have arrived at a total income of 8.85 crores. You have allowed at a total income of 8.85 crores. People, if I have to compute tax, my tax rate is plus of 7%. My total income is between 1 crore to 10 crores with a surcharge of 7% and a cess of 4%. And a cess of 4% will become my final answer. Agreed? Agreed, everyone? Yes or no? Any doubts on this? Are we good to go? Yes. Yes. First question I did. Question 2 you are trying. Question 2 you are trying. Let's see. It says Parikh Hospitality is engaged in the business of running a hotel of 3-star category. People, very good. We are at 35 AD. I've been telling this earlier also, people. Section numbers are not important in exam, but the more you know, the better it is. That is why I'm just practicing it along with you. If you remember, good for you. If you don't remember, don't worry about it. Yes. The company's statement of profit and loss has been given a profit of 152 lakhs after debiting and crediting the following items. Hey, I am moving on to last line. Compute the total income of Parikh Hospitality, indicating the reasons for treatment of each item, assuming that the company is not eligible for 35 AD, which means it doesn't matter. Ignore the provisions relating to MAT and the provisions of 115 BAA also, which means just do normal, and that too normal computation as a normal business. No 35 AD also. Ignoring everything off also, people. I am looking at each item. Again, notice all items are already debit and credited, so focus on those. Yes. First one says payment of 0.25 lakhs and 0.3 lakhs in cash is paid on 3rd December 24 and 10th December 24 respectively for the purchase of raw corn to Mr. Raja, an agriculturist, and Khalid, a spice trader, for purchase of masala used for corn products. People, adjustments like these where there are multiple elements, focus on the elements which make importance. The element which makes importance here is cash. The moment you heard the word cash, some sections will trigger for you. Section number 1, because it is in P&L, automatically will trigger 40A3. So now you have made payments in cash. Rule says you cannot make payment more than 10,000. Looking at 0.25 lakhs and 0.30 lakhs, which means 25,000 and 30,000. Payments are more. Then comes in your question to look at exception to the rules. Exception to the rule comes and says if you make a payment to farmers, it is allowed even in cash. Now notice carefully. First payment was made to agriculturists, therefore no problem, no implications. It is already there in P&L. It can be there in P&L, therefore ignore. The first one gets ignored. Coming to Khalid, people. Khalid is a spice trader. People, item of exception is only for farmers. And we wrote a blue box. The blue box comes and says any trader or middleman is not allowed. I have made a payment to a trader which I should not make. There in P&L, not there in P&L. Should be there in P&L, not be there in P&L. Therefore, disallow. How much? 30,000. I am doing it in PGBP. I am disallowing 30,000 in PGBP. Agreed. Yes, that is what I was talking about, people. Looking at every adjustment, focus on the important elements. You will get the answer automatically. Point number 2. contribution towards employees pension scheme notified by central government under 80CCD for a sum of 3 lakh rupees is calculated at the rate of 12% of basic salary and DA payable to employees in terms of employment. People, 80CCD talks about national pension scheme, and the rules of national pension scheme. Current year amendment comes and says you can pay up to, you have paid, which is within, should be there in P&L, already there in, therefore super. Yes. Next, payment of 6.5 lakhs is made towards transportation of various materials procured by one of its hotels to Mrs. Bansal and Transport, a partnership firm, without deduction of TDS. The firm opts for presumptive taxation under 44AE and has furnished a declaration to this effect. It has also furnished its PAN number in tender document. People, I have done payment to a person, and the question says I forgot to do TDS. People, TDS defaults liable for disallowance of 30%, but hidden adjustment here, people. TDS chapter comes and says when it comes to 194C, if the transport operator owns less than 10 vehicles and gives you a declaration along with PAN number, the TDS is not applicable. People, the person is opting for presumptive, which means he has less than 10 vehicles. He's also giving you PAN number, which means TDS not applicable. He did not do TDS. He doesn't have to do TDS, which means no issues here. P&L item is there. Item should be there. Therefore, very good. Therefore gets ignored. Yes or no? Yes. Sometimes people references come from other chapters also. We discussed in TDS also. I told you multiple things, don't read it, but in 194C this item is important. Focus attention on those. That is what has been tested. Yes. Next, a profit of 12 lakh rupees on sale of plot of land to Avimunya Limited, a domestic company, the entire shares of which are held by assessee company, which means this company is my wholly owned subsidiary. The plot was acquired by Parik Hospitality Limited on 1st June 2023. Notice carefully, people, I have made a profit from trading or from land, which means profit I made is a capital gains. Now, if you remember capital gains, people, there is a section called section 47, which says transactions with wholly owned subsidiary is not regarded as transfer and therefore is exempt from capital gains. Yes or no? Yes. People, first of all, this 12 lakh rupees is sitting in my P&L, should not be there in P&L because it is different head, So first remove it from P&L. People, it is there in P&L as a profit or a loss, which means my profit is higher, lower. I need to therefore minus in and ignore in CG. Minus 12 lakhs in PGBP and ignore in CG. People, the ignorance of CG has to be written. You have to go to CG and write a note saying that profit is not regarded as transfer and therefore is not taxable because it is from my wholly owned subsidiary. This is one adjustment which I have seen ICA testing in multiple attempts. Yes, because this is one transfer which most of the people don't pay attention to. Yes, so pay attention to this transfer, people. It is important from an exam standpoint. Clear? Yes. Next, contribution of 2.5 lakhs has been made to Indian Institute of Technology with a specific direction for using the scientific program research approved by prescribed authorities. I've made donations to scientific research. Rules of donation says 100% allowed as deduction except for land. However, donations are not allowed if you are opting for special regimes. I am doing normal regime, so therefore 100% allowed as deduction. It is there in P&L. It should be there in P&L. Therefore, that's all. Therefore, ignore. Agreed with me? Can we go forward? Yes. Expense of 10 lakh rupees has been incurred on foreign travel of 2 directors for a collaboration agreement with the foreign company for a brewery project to be set up. The negotiation did not succeed and the project was abandoned. People, I was planning to do a new project for which I incurred some initial cost. Project did not go through and therefore I have abandoned the project. I have booked this expense in my P&L. Why am I discussing this with you? To check whether it is capital or revenue. To check whether it is capital or revenue. People, is an asset coming into existence, which means expenses is not capital. Expense is not capital. This gets revenue and allowed as deduction. Already therein, should be therein. Therefore, can someone remember the case law? Very good. It's Priya Village Roadshows. Priya Village Roadshows will come into picture for this. Yes, where we discuss people when it comes to Priya Village Roadshows. Two things we discuss. One is Priya Village Roadshows. One is McGrath. McGrath comes and says if the company is first time getting incorporated, then if you incur those expenses, then it is not allowed. But if it's existing operations, in that if you're planning a expansion, then for that if you abandon any project, that expenses is revenue. That expenses is revenue. Priya Village Roadshows will get allowed as deduction. Yes or no? Yes. Sometimes knowing a bit of a case laws, flexing people, nothing else. Yes, do that. Fees of 1 lakh rupees is paid to independent directors for attending board meetings without deduction of TDS. People, nothing given. TDS, take the number and allow only 70%, which means disallow 30%. Number allowed is 1 lakh. Number can be allowed is 70,000. Therefore, 30,000 in PGBP. Disallow 30,000 in PGBP. Yes, yes. Then says depreciation charged to rupees 10 lakhs. People, nothing given. Assumption is this is P&L depreciation. Therefore, disallow 10 lakhs in PGBP. Disallow 10 lakhs in PGBP. Yes. Next comes 10 lakhs being additional compensation which is received from state government pursuant to an interim order of court in respect of land which was acquired by the state government in 22-23. People, where does it being discussed? We have it in capital gains. People, notice the lines very carefully. 10 lakhs is towards my enhanced compensation. It is not interest on enhanced compensation. It is the compensation itself which has come to me. It is the compensation itself which has come to me, and therefore it's part of capital gains. Now, chapter of capital gains come and say, people, when it comes to compulsory acquisition, any enhancement of compensation will be taxable in the year in which the money is received. Only interim compensation is taxable in the year in which final order is received. This is enhanced compensation, taxable when it is received. People, this is compulsory acquisition of 22-23. Did you tax it in 22-23? You taxed it in current year because current year only you received it, which means to be taxed under capital gains. Remove it from, add it to entry minus 10 lakhs in PGBP and plus 10 lakhs in capital gains. Huh? Hey, that is for interest. When is the final order come? It's through an interim order. When is the final order come? Huh? Do you know? You can make an assumption then. While yes, I think your word is also right. Your word is also right. You can also probably come and say the interim order compensation may not be taxable because no clarity is given on final order, which means final order may be on a subsequent date. Yes, that can also be an assumption, which means either it can be 10 lakh CG or it can be exempt in CG. When I say exempt, I mean basically deferred taxation. Yes, you defer it for a subsequent period. You can decide what is right. Anything works fine. Yes. Then dividend received from a foreign company 5 lakh rupees in which it holds 15% equity share capital. People, I have received to be taxed under. Therefore, remove from, add it to. That's all. Remove from PGBP and add it to IFOS. There were about 3 years ago and 4 years ago, people, this was a little bit of relevance. Because back in those days, we had a special tax rate called 115 BBD. Where they used to come and say if a foreign company gives you dividends, it is taxable at a special rate. Those are all been scrapped off. So therefore, right now, nothing. Just take it from PGBP and move it to IFOS. Yes, people, we are done with all debits and credits. We are now moving to additional information. From here, all information given does not form part of P&L. Yes, as a corporate debt restructuring, the bank has converted unpaid interest of 10 lakh rupees up to 31st March 2024 into a new loan account repayable in 5 equal annual installments. The first installment of 2 lakhs was paid in March 2025 by debiting new loan account. People, I had to pay interest in the past years, which I have not paid. Because I did not pay, they would have been disallowed under section 43B. Those payments have been converted into loan and now repaid. Now repaid. When we discuss 43B, people, I came and told you when a loan is when an interest is converted into loan, conversion is not treated as payment. It will be treated as payment when the installments are paid. In the current year, I paid installment of which was already disallowed in past years, not there in P&L. Current year can be there in. Therefore, minus. Very good. Ignore the 10 lakhs. Ignore the 10 lakhs. Only allow 2 lakh rupees. Only allow 2 lakh rupees. Next. I have depreciation as per Income Tax Act of 15 lakh rupees. People, this is not there in. Should be. Therefore, minus. So first one is minus 2 lakhs in PGBP. Second one is minus 15 lakhs in PGBP. Then the company has received a bill of 2 lakh rupees on 31st March 2025 from a supplier of vegetables for supply made in March 2025. The bill was omitted to be recorded in the books in March 2025. The bill was paid in April 2025 and the necessary entries were made in the books. Then people, I have missed the entry. Income tax issue, accounting issue. You have missed an entry. This is a payment entry or a income entry? It's an expense entry. It's an expense entry which you missed out. Now, in all practical sense, you cannot claim it. But because ICA is giving you this question, it means ICA wants you to. Therefore, minus. Therefore, minus 2 lakhs in PGBP. Ideally, you can claim it in next year, big deal. Yes, but ICA would come and say this is ICDS 10. You know that there is an expense which was omitted to be recorded. Why don't you claim it as an expense? No income tax office is going to allow this to you. But nevertheless, yes, might as well give it off. So from an ICA perspective, you will claim it as a deduction. Because it is not there in my P&L. That's all. Compute the total income is what the question asks for. Luckily, this question does not want your tax liability also. Yes, people, this template will now help you understand what to do. If you notice, I don't have any salaries, no HP. I have a PGBP, I have a CG, and I have a IFOS. 2 components are there in CG, one ignored component and one enhanced compensation. Yes, and one item is there in IFOS, which is my dividends. That is what you need to keep track of, people. Like I told you earlier also, when you get a multiple level question, you cannot do line by line. You need to do the sequence. Always first full PGBP and then CG and then IFOS. That is how you can go forward. You cannot change the template. Manav. Point F. Okay. You are a 3-star what? Hotel. 3-star hotel. Brewery project means what? You're planning to buy some. Brewery project is more like buying alcohol and everything for the hotels. Brewery means what? You're going to buy some coffee machine or some drinkable items, beverages and all those things. Part of your hotel, not part of your hotel. See, brewery project does not mean you're starting a new business. Brewery project would mean that you're going to, you have decided that you wanted to sell some exotic coffees in your hotels, right? For which you're not having, equipments. So you probably went and met a supplier or something. And the supplier, you came and said, I want to buy, exquisite coffee from you and all those things. Does not necessarily have to be a new business altogether. What? Can be so. But it kind of looks weird, Manav, because you're not using the word brewery business. You're talking about a project, right? A project would not necessarily mean you're opening up a new line of business itself. A project would necessarily mean that you're taking up an initiative, basically. Right, that's what I would probably put as an assumption. Yes, I have seen McGraw order case only apply in case when the business itself has not started, like first time incorporations. Yes, that is when McGraw has predominantly been triggered upon, and that too McGraw was something which only came in one of the exams, past exams. From an ICI study material perspective, McGraw has not even been notified. So in a study material perspective, there is only PVR, and therefore in study material, whatever questions are there are always allowed as deduction. As such, since that McGraw case law never has been tested also in exam, so standard assumption would be to always go for PVR unless you can very clearly establish from the question itself saying that there is going into. Yes, items which we discuss, people. Purchase of raw materials, we are only disallowing 30,000, which is pertaining to the trader. I am ignoring the pension scheme because it is within 14%. I am ignoring any payment to transporter because it does not trigger TDS. I am ignoring IIT contributions because it is not under special regime. I am allowing 10 lakh. Potana. They've used McGraw. Yes, now they've used McGraw where they come and said expenditure is incurred for a project not relating to existing business. Project was abandoned without creating an asset. Expenditure is capital in nature. Brewery project is not related to existing business. I don't know how it works. Yes, yes, weird ways can be operated. Weird ways can be operated, but I'll give you this also, people, that in exam, sometimes when things are as complex as possible, they will give you alternatives also, and alternatives would have prior-village roadshow also. As such, this has never been notified, like I said earlier also, people. Yes, it has never been notified from a study material perspective, so make a choice. I would still feel, looking at the question, brewery project would be part of my hotels. Doesn't look like a different line of business. I would prefer to go for prior-village roadshows. Yes. Next, fees paid to directors without deducting TDS will get disallowed for 30% because it is not liable for TDS. I am removing my 12 lakhs because it's moved to capital gains. I am removing my 5 lakhs, which is my normal depreciations. I am removing my 10 lakhs because it is moved to capital gains. Removing my 5 lakhs because it is going to IFOS for dividends. Removing my 2 lakhs of interest, which is conversion of loan. 2 lakhs of omission, which I made on the recording of the purchase. Yes. After this, people, I will arrive at capital gains. Profit on sale of subsidiary has been exempted off because it is not regarded as transfer. Like you discussed, interim order has been treated as not taxable in the current year, but taxable when you receive final order. And dividends have been moved to 5 lakh rupees for IFOS. Yes. Why have they given ATM? It was given somewhere. Okay. I'm sorry, we missed this. It says dividend of 7 lakh rupees is distributed on 25 September to its shareholders. People, for those who remember ATM provisions, whatever income I have, to the extent if I distribute back to my shareholders, it will not be treated as income. It will be allowed as ATM deduction, provided the payment is happening 1 month before the due date of filing return. My due date of filing return is 31st October. 1 month before becomes 30 September. I paid it on 25th September, and therefore it is within the timelines. I have an income of 5 lakhs. I have distributed 7 lakhs. I can claim a deduction of 5 lakhs. Whatever is my income is what I can claim as deduction against. Yes, so I have removed the 5 lakhs also for ATM. Arriving at my final income. Yes or no? Yes. People, items where we are going wrong, like I said, McGraw case, the additional compensation cases where there are multiple assumptions. It's always a good idea to mark this and keep so that the day before exams you can just quickly go into these adjustments and just be careful about this, nothing else. Yes, either you can do that or you can create a separate sheet for yourself when you go home. You can call it as library of adjustments. Yes, you can call it as library of adjustments, where you can say, if this question comes, do this. If this question comes, do this. If this question comes, do this. Either way works. Yes, I have already done a part of it, people, when I gave you the concept guide where I called it special adjustments. Yes, so some part of it I have done, some part of it you can also do if you are making mistakes on those. Do that as well. Yes. Question number 3, people. The thing is going to change a little bit here. Focus on the question. Until 1 and 2, we were talking about companies. Question number 3 says Mr. Harish. We are now going back to an individual. It says Mr. Harish is age 66. I am stuck at senior citizen. The person is age 66 and is running a business as a proprietor, furnishing the following incomes to you on 31st March 2025. Holding back the information, people, I am going and checking. Last line, it says compute the taxable income and the amount of tax payable by Mr. Harish on such income for the assessment year 25-26, assuming that he exercises the option of shifting out of default regime. Person is going for alternate regime. Tax payable will have a slab of, very good, will have a slab of 3 lakhs. Keeping that thought in mind, people, looking at the item, it says net profit is 3,65,000 from wholesale business of textile and fabrics, arrived after charging the following expense in the P&L account. So I have arrived at a P&L after taking the following items. You have to check what is the following items. First says personal traveling expenses of 12,750. I have claimed an personal traveling expense in my P&L. I cannot claim, therefore add back and disallow. Therefore add back. Yes. Next, purchase is made for a furniture for a shop on 13th June 2024 for 25,000 rupees, but is charged in shop expenses. People, what is happening here? Very good. People, always priority number one when it comes to disallowances to check for whether it is capital or revenue. Looking at the item itself, it says I am in capital because my business is of textile and fabrics. Furniture is not my stock in trade. Therefore, I've purchased capital asset. I should have claimed, I have charged it fully to P&L. So two things will happen here, people. Item number one, disallow the whole expense and then claim depreciation. People, asset purchased on 13th, which is more than allowed depreciation at the rate of 10%. Number becomes 2.5. Number becomes 2.5. Yes. Sometimes one adjustment can have multiple triggers, people. So be careful about those. Yes, whenever it comes to capital, note it in mind that you have to give depreciation. You have to give depreciation unless it is a case of McGrath where the asset does not come into existence. If the asset is not coming into existence, I don't have a problem. But if the asset is coming into existence, always looking at a capital item, please grant depreciations. Next, the person owns a house with 2 floors constructed with financial assistance of HDFC Bank, out of which ground floor is used by him for self-use and first floor is used at a rent of 8,500 per month. I am in the chapter of HP. Now, HP, they're coming and saying one building split into two. First half of it is SOP, second half of it is LOP. In the SOP, I don't care. But in LOP, I'm having 8,500 per month as my rent. This becomes my GAV. It becomes my GAV from April 2024. The municipal tax paid for the whole house is 2,500 rupees. This is my municipal tax to be allowed as deduction. Correct? No, people, half only can be allowed as deduction because only half is LOP. Then the interest paid on the housing loan is 52,000. People, 52,000 is for full house. Again, split into 26 for LOP. Before you do give the interest, you have to also allow 30% standard deduction on your LOP property. Yes, do that. You have to take this under HP provisions. Then he has deposited insurance premium on the life of self of 12,500, wife of 13,500 and daughter of 28,000 rupees. People, all these are life insurance. Section 80. Very good. Section 80C. 12,500 plus 13,500 plus 28,000 gives me 54,000. So I'm getting 54,000 ka deduction under 80C. I've also repaid housing loan of 50,000. This is also 80C. Total becomes 1,04,000. Still within the limits, no problem. Then I have paid 55,000 by credit card for health insurance of self and family. People, health insurance is 80D. Amount allowed as deduction 50,000. Read the age on the top. I am at 66. It is 50,000. Will be allowed as deduction. That's all the facts, people. That's all the facts. You need to compute your income and find the tax payable. The only thing to be kept in mind is 80D is everything else you know. Yes, so I've taken my self-occupied property, people, allowed 26,000 as the interest reduction. I have my let out property where I've taken the whole GAV of the property, reduced 1,250 being 50% of my municipal tax, allowed 30% ka standard deduction and the interest on loan. I got an income of 44,525. I have a loss from HP. I have an income from HP. I'm cross-setting off, giving me an income from house property of 18,525. In my PGBP, I disallowed 12,750 for my personal expense, 25,000 for a capital asset, but 2,500 was claimed for depreciations, arriving at a gross total income of 419,275. For ATC, I claimed 1,04,000. For my ATD, I claimed 50,000 because person is a senior citizen, giving me a total income of 2,65,280. I am a person with the age of 66 with a slab of 3 lakhs. 2,65,000 becomes 0. Even if it was more than 2 lakhs, people, you will get rebate, and therefore the answer was still 0. Clear? Yes, this is too much of a basic question and more interrelated syllabus, will not be tested in finals. Yes, check question number 4. This one is an interesting question. You have to pay special attention to the question. It says XY and HUF of Z XY and HUF of Z are partners with equal shares in profit and losses of a firm where MS Popular Cinevision, which is engaged in the production of TV serials and telefilms. I have a firm, people. In that firm, there are 3 partners, X, Y in individual capacity and HUF of Z and HUF of Z, which means Z is not the partner, HUF is the partner, Z is going to be representative capacity. Z is going to be representative capacity. This is going to be complicated. Think about this carefully. The earlier partnership deed did not authorize for payment of remuneration of interest to partners. So they had a partnership deed, did not allow for any remunerations. The partnership deed was then revised on 1st June to authorize a partnership remuneration payment of 1 lakh rupees per month from 1st June to each working partner and a simple interest of 15% per annum on the partner's capital. X, Y and Z are all actively associated with the affairs of the firm. I now have a deed, people, which allows for interest and salary. Problem with interest is I can only allow, it gets disallowed to that extent. It gets disallowed to that extent. On the similar terms, people, salary will also be allowed, but only from June, will only be allowed from June because deed is only from June. You cannot do retrospective changes. You cannot do retrospective changes. Keep those thoughts in mind. The profit and loss account of the firm is given to you at a net profit of 10 lakh rupees after debiting and crediting the following items. I am ignoring everything and going to check the last line. It says compute the total income of the firm for 25-26, stating the reasons for treatment of each of the items. I only want total income. Good for us. Looking at the items, people, items are already debited and credited to P&L. Look at the items and tell me what to do. Yes, first one says interest amounting to 5 lakh rupees each was paid to partners on the balance standing to their capital accounts on 1st June to 31st March. On 1st June to 31st March. People, June lend March ka I am going to pay him interest, which means logically I have not paid any interest from April to May, so I am safe. I am safe. The only problem is, people, the interest which I have paid is 5 lakh rupees at the rate of, I will reverse work. If 5 lakh rupees is 15%, how much is 12%? 4 lakhs. I have extra paid to each partner, disallow 3 lakhs. I will disallow 3 lakhs. So this gets added back for 3 lakhs under the head PGBP. This gets added back for 3 lakhs under the head PGBP. Why? So what? I am giving to HUF. They have not told you that you are not giving. They have told what? It is 15% per annum on partner's capital. So which means they give interest on HUF's capital. Still allowed. Still allowed. If the question would have given any interest to Z, then I would have not disallowed it. But this is saying only for the partner's part of it. Yes. Next. That is for salary, ma. Next, remuneration paid to partners, including partners in representative capacity, is given with 30 lakh rupees. People, this is the salary which I have paid to all the 3 partners, X, Y and Z also. For those who remember, people, when I told you firm provisions, I told you that even if you are a partner in representative capacity, your salary will be clubbed in your individual capacity. Both will be taken for the purpose of computing actual salary payable. Computing actual salary payable. People, I need to compute my salary, which means I cannot take this number right now. I will disallow this expense right now. I will disallow this expense right now. People, the question I have is this 30 lakhs all partners or each partner? It is all partners. Read the lines very carefully. Read the lines very carefully. It is all partners. So I am disallowing this 30 lakh rupees, people. I will come back to this later after I compute book profits. Next, interest amounting to 2 lakh rupees is paid to Z on the loan provided to him in individual capacity at 16% interest. This is ignored because only salary has an issue. Only salary has an issue. Interest to representative capacities does not trigger 12% rules. Does not trigger 12% rules. People, I am ignoring this on the assumption that market value is more than 16. Market value is more than 16, which means I am within my market limits. I'm within my market limits. So that is an assumption you will have to write. That is an assumption you will have to write. Next, royalty is 5 lakh rupees paid to partner X, who is a professional script writer, for the use of his scripts as a separate agreement between the firm and an X. The same is authorized by partnership deed. People, I am paying royalty to X. I am paying royalty to X. Question R2. Either I let it go as it is because it's an individual transaction, Or I come and say X is my partner and therefore this is also salary, which is right. This is also salary and therefore it gets disallowed. And therefore it gets disallowed. I gave it in special adjustments very long back, people, to you, where I came and told you any payment received to partners, whether it is royalty, not royalty, any other elements also will still be considered as salary, will be checked for the purpose of book profits. Yes. Next, two separate payments have been made on 18,000 rupees and 15,000 rupees in cash on 1st February 25 to Mr. Altaf, a hairdresser, against a bill for his services rendered in Jan 25, and two payments of 19,000 and 10,000 is made in cash on 1st February and 2nd February to Priyam, assistant cameraman, against the bills provided for services in Jan 25. People, I am talking about cash payments. 40A3, rules of 40A3 comes and says don't make payments more than 10,000 in a single day to a single person. Looking at Altaf first, people, Altaf has received 18,000 and 15,000 both on the same day, totaling to 33, made more than. Therefore, coming to the woman called Priyam, coming to the person called Priyam, Priyam has received 19,000 on one day and 10,000 on another day. People, the 19,000 which I received is, sorry, which I paid is disallowed, but the 10,000 which I paid is within the limits, it's already there in P&L, therefore no adjustments to be made, therefore ignore it off as a treatment. Up to 10,000 is allowed, people. Anything more than 10,000 has an issue. More than 10,000 has an issue. So 19,000 will get disallowed, but the 10,000 will be allowed as deduction. So which means totally I have to disallow 33 plus 19, which is 52. Agreed. Move forward. An amount of 5 lakh rupees provided in the books of accounts on 31st March 25 as liability for remuneration to Shreya, a film artist and a non-resident. Tax deducted under section 195 from the amount so credited was paid on 3rd June 2025. People, again, line item is of TDS. Two rules in TDS. You have to deduct before 31st March and deposit before 31st October. This is a company. This is a firm, so 31st October. Now comes the question, payment has happened on 3rd June, but when has the deduction taken place? People, that is what the $1 million question is, because they say 5 lakhs is provided in the books, but they say tax has been deducted and credited was paid to 3rd June, which means credit happened on 3rd June. Now you need to ask yourself a question. Credit means what? Credit in the books. People, for those who remember the entries of expense, expense entry means expense account debit to TDS payable to cash, which means on 31st March you should have credited TDS. When did you credit TDS? 3rd June, which means credit happened after 31st March, and therefore you are triggering a disallowance. While the payment happened on 3rd June, people, the TDS entry was booked on 3rd June. You should have booked the entry on 31st. Therefore, this is a defaulted payment. Amount of disallowance, full 5 lakhs. Amount of disallowance, full 5 lakhs. Like I said, people, sometimes you will not get the question as straight as possible. You need to know what the accounting entries look like. Yes, credit is only going to happen on TDS payable, and credit is happening only on 3rd June, which is after 31st March, and therefore that will trigger a disallowance. Tax deducted at source under 195 from the amount so credited was paid on 3rd June. Makes sense. Yes, makes sense. Definitely does make sense. This is getting ignored. Okay, maybe I did not read the English properly. People, what would be the English which I read? It was credited and paid. If it was credited and paid on 3rd June, then it would have been disallowed. Since it's credited was paid, it is ignored. See how English can make a difference. Yes, my mistake on the English, but see the difference which can happen. A small word of English can make such a big impact for you. Yes, so be careful about this. Next, an amount of 6 lakh rupees provided as gratuity for 1 year on the basis of actual valuation. Gratuity which is actually paid to employees is 1.5 lakhs. You should have paid 6 lakhs. You have paid only 1.5 lakhs. You have to disallow 4.5 lakhs. 4.5 lakhs. This is what the answer is. Yes, interest of 1.2 lakhs is received on income tax refund under section 244(1)(a) in respect of assessment year 24-25. People, income tax refund will be taxable in the year in which money is received. It is received in the current year, already therein. Therefore, move from PGBP, take to IFOS. Don't start ignoring things. Yes, it's move from PGBP and take to IFOS. So remove from PGBP plus in IFOS. That is the total income provisions. People, at this stage, the moment you reduce your income of interest, you will arrive at something called as book profits. In that book profits, for the first 6 lakhs, it is 90% or 3 lakhs, whichever is higher, and for the balance, it is 60%. You'll arrive at a salary number. That salary number versus actual number is 35 lakhs. Very good. It is 35 lakhs, whichever is lower. That is the maximum you can pay. That number will arrive at your salary to be paid, to be removed from your PGBP computation. If I have to show it to you quickly, people, after adjustments which we do, we will arrive at a book profit of 51,82,000. Check and tell me, for the first 6 lakhs, it is 5,40,000, and for the balance 45 lakhs, 45,82,000 at the rate of 60%. 89,000. So which means it totals to 2749 becomes 3289 lakhs. You should have only paid 3289 lakhs, but you have ended up paying 35 lakhs. You will allow only 3289,200. Arriving at a PGBP income of 1892,800. Add back your income tax refund, you will get a gross total income. No adjustments given in chapter 6A. Therefore, this arrives at your total income. Yes. In this question, people, since tax payable is not being discussed, you will not check for AMT also. Even if tax payable is given, you would not check for AMT because you have not claimed any of the three deductions, which is heading C of chapter 6A, 10AA, 35 AD. Yes, only of the 3 items, and you get AMT provisions. You get your AMT provisions. Is that clear? Any doubts on this? No. Okay. Yes, I think we are going to do this question, or let's check. I think most of the adjustments will remain the same, but let's check. Question number 5 says Lamba Limited is engaged in the manufacture of fabrics since 1st April 2012. Its statement of P&L account has been given you with a profit of 750 lakhs after debiting and crediting the following items. I am ignoring the information and I am moving to the last. It says compute the total income of Lamba Limited by analyzing and applying the provisions of Income Tax Act. Briefly explain the treatment of each item. Ignore the provisions of MAT, and also don't assume that he is opting for 115BAA. I am in normal provisions. This time, for the first time, luckily nothing has been mentioned about additional depreciation, meaning you will have to give additional depreciation even if the question does not talk about it. Pay attention to that. Yes. What are the items given, people? First item says depreciation charge based on useful life. Quickly, plus, people, now you're getting used to it. Industrial power tariff of 4.8 lakhs received from Maharashtra government is credited to P&L. Received a grant there in P&L, should be there in P&L, therefore ignore. Company has provided 18 lakhs being sum fairly estimated as payable with workers' certainty on agreement for workers' union for periodical wage revision. Provision created for ascertained liabilities not triggered in 43B, therefore ignore. Dividend received from US company 12 lakhs minus 2 PGBP, add to IFOS minus 2 PGBP, add to IFOS. Loss of 17 lakhs due to destruction of machine worth 24 lakhs by fire due to short circuit, and 3 lakhs are received as scrap value. The insurance company did not admit the claim of the company on charge of gross negligence. People, I have lost capital asset. I have lost a capital asset. This is my capital gains. This is my capital gains. Agreed, not agreed? Agreed, not agreed? What have you lost, people? Sorry? As of now, this is a capital asset. As of now, this is a capital asset and a capital gains thing. Then comes the question, people, have the block ceased to exist or not ceased to exist? Has the block ceased to exist or not ceased to exist? Nothing is given. Nothing is given. Assumption is ceased to exist. With the asset being ceased to exist, move to capital gains. Move to capital gains. People, what will get moved to capital gains is the question first. You have to first put down what is there in the P&L. People, in the P&L, I have a loss of to be reversed. But at the same time, I have received scrap value, which is also there in P&L, to be reversed, which means minus 3 lakhs. Net effect, I have to disallow 14 lakhs. Now, people, in capital gains, insurance has not agreed a payment. But you have still received scrap value. So you still have full value of consideration as 3 lakhs. Cost of acquisition is people, here is the question. I don't understand. Machinery is worth 24. Loss I made is 17, where I only received a scrap of. What is happening? Sorry? Exactly. People, notice the words very carefully. Sometimes when nothing is given also, it is given somewhere. Noticing that the machine is worth 24 lakhs, which has been destroyed, but you're only booking a loss of 17 lakhs. In simple words means not all machinery has been destroyed. The machinery still remains. With the machinery still remaining, people, you have no choice but to continue depreciation. For you to continue depreciation, what will happen, people? Income tax will say, if depreciation is being continued, you will only remove my sale value from the block. So sale value gets removed from the block, which means 3 lakhs will get removed from 24 lakhs. Agreed, not agreed? But whatever treatment has happened in accounts has to be reversed. What treatments did you do in accounts? You booked a loss of 17 lakhs. So please add back 17 lakhs. You also put in P&L. You also put in P&L 3 lakhs, which you will reverse. These are the two entries which will happen, people. On the contrast, what will happen? Your depreciation will tone down by 3 lakhs. You'll have a block of 21 lakhs on which you will do depreciation. Yes or no? So when you come back to depreciation, we'll discuss about it, people, because we need to know other assets. So this is what will happen, people. This is me coming and telling you that sometimes your accounting makes an impact. The way you look at numbers can cause a difference. Pay attention. Next, provision for gratuity based on actual valuation is 320 lakhs. Actual gratuity debited is 160 lakhs. Not really, no. You book a loss on 17 in P&L, what will you do? Scrap also will go from P&L only. To machine, how much? Full 17. To machine, you pass full 17, and then cash will be. No. They are saying loss of 17 lakhs is from destruction. So which means the moment destruction happened, I booked a loss of 17. After destruction, I got a scrap value of 3. So there are two different things happening. So 17 is booked in my P&L. When 17 is already booked in P&L, scrap is coming where? P&L only, right? So the whole scrap will also put in P&L, loss will also put in P&L. It's not loss after scrap. It is loss from the asset and then the scrap. Because if you notice the process flow, Sehul, what happens is, machine is destroyed today. First thing, what will you do? Book a loss. After that, whatever you have in your hand, you will go and try to sell and then make a scrap, which means first you will book a loss on day one and then you'll account for a scrap in subsequent days, correct? In which case, what is happening? The whole loss of 17 is including scrap or without scrap? It's without scrap. So therefore, whatever you have in books is 17 lakhs of scrap and 17 lakhs of loss, and then you have a 3 lakhs of scrap also, which is coming on a subsequent date, right? Because that's how accounting entries I've seen, at least in my practice. What I've seen is the whole asset will be destroyed off, and therefore the whole asset will be removed from the block, and therefore whatever extra you get, you put it in the P&L. That is how the account entries. Yeah. Yes. Next, provision for gratuity is based on actual valuation of 320 lakhs. The actual gratuity paid is only 160 lakhs, same as earlier questions. We are doing 43B, therefore disallow 160 lakhs. Therefore disallow 160 lakhs. Next. Advertisement charges is 2.3 lakhs, which is paid by check for advertisement published in so many year of a political party registered with Election Commission of India. People, this is nothing but donations. This is nothing but donation. Therefore, add in and claim 80 GGB and claim 80 GGB for 100% and claim 80 GGB for 100% because payment has happened by check. Payment is happened by check. Therefore, 100% allowed as deductions. 100% allowed as deductions. Yes, sir. Yes, sir. Next, long-term capital gains of 3 lakhs on sale of equity shares of 12th April 24, on which securities transaction tax was paid at the time of acquisition on sale. People, when question is that blank, the first thing you need to ask yourself is whether it is there in P&L or not. How do you identify? It is still point number H, and point number H is part of the following items, which means it is there in P&L. It is there in P&L. First of all, remove the gains. Remove the gains. Therefore, minus in, add in as section, very good, as section 112A because it is STT paid. Because it is STT paid. 3 lakhs left. 1.25 lakhs is not taxable. Balances taxable. Balances taxable. Yes or no? Yes or no? It doesn't matter. Question asked only for total income. Doesn't matter what tax you say. Doesn't matter what tax you say. Yes, for those who are deliberating right now, this is if before 23rd July or after 23rd July, it does not matter. Other information given to you, people. Normal depreciation is given to you. Normal depreciation given to you as 71 lakhs. Here comes the critical piece. Here comes the critical piece. Some time back, we had a machinery where we had to charge depreciation. Now suddenly they come and say normal depreciation. Apo people, question is, this 71 lakhs already has depreciation of that asset or does not have depreciation of that asset? We discussed about it earlier. When ICA gives you the line saying normal depreciation, it means whatever is there on the top is already done. Therefore, just remove 71 lakhs and I am luckily going to do no adjustment in depreciation there. I'm going to do no adjustment in depreciation there. So I'm just saying no dep. I'm saying no dep on the top because assumption is already covered here. GST of 8 lakh rupees collected from customers was paid by the company on due dates. On an appeal, the High Court directed the sales department to refund 3 lakhs. The company in turn refunded 2 lakhs and balance 1 lakh is shown in current liability. Same adjustment, take 1 lakh as in current liability. Now people, if I notice this carefully, nowhere in the question have they talked about any new assets. So luckily there is no additional depreciation. Answer is over. This is my total income. Let's check, people, the assumptions which we made. Is this fine or not? Yes, provisions have been done properly. Loss on destruction, they have removed 17 lakhs as a loss. Provision for gratuity is fine. Advertisement has been removed. GST refunded is added 1 lakh and they have removed 3 lakhs also as scrap. Coming to capital gains, people, they have only taken 3 lakhs as 112A, which means they have also assumed the same thing, that I have a block and the block is not ceasing to exist. So therefore you are right on this. Based on the differential numbers. based on the differential numbers. Is that clear? Yes, that adjustment alone, please highlight it and keep people, an important adjustment for you to go through before your exams. Yes, focus on the provisions. Focus on the provisions. This is the questions which was there in study material. Yes, but those are all the easy pieces. Let's talk about questions which are spoken from exam perspective. My hand-picked questions for you to practice. Yes, question number one we do. Question number one we do. Balance questions we'll come back and we do when we come from a break. We come from a break, we'll do only question number one and come back and do the balance questions. Question number one says, Mrs. Janani reports to you her gross receipts from interior decoration profession, which is carried on by her on the year ended 31st March 25 for 47,80,000. People, I am an interior decorator, a professional with a gross receipt of 47,80,000, indirectly showing me presumptive taxations. Her net income as per income and expenditure account is 25 lakhs before adjustment of depreciation of 1.5 lakhs. So without claiming depreciation, I have a net profit reported of 25 lakhs. Now people, the question is, this depreciation is as per income tax or as per accounts? This is as per income tax. It's saying before adjustment of depreciation, meaning before giving depreciation. Before giving depreciation. If it was accounts, then they will say which includes depreciation claimed of 1.5 lakhs. If they use the word includes depreciation claimed of 1.5 lakhs, it means that is accounts depreciation. This is before adjustment, meaning this is income tax depreciation which has not been taken into consideration. Not been taken into consideration. She did not pay any amount of advance tax during financial year 24-25. People, I am now going to have a interest under section 234C. But people, I am a presumptive case. My advance tax liability only accrues in fourth quarter, which means I'll only have interest of 1% on 100% of the shortfall. 1% on 100% of the shortfall. She has two residential house properties, one of which is self-occupied and the other is let out for a monthly rent of 15,000 rupees. Is Janani eligible to opt for presumptive? Yes. If so, is it beneficial for her to opt for presumptive? I don't know. Advice, assuming that she has approached you for consulting this matter. She has approached you for consulting this matter. People, I need to check for two things. I need to check for two things. First, what happens in presumptive and what happens without presumptive. What happens without presumptive? Before that, people, let's put out our heads of income. The first head of income I have is HP. I have is HP. The question in HP comes and says I have what? I have one SOP and one LOP. SOP Puerto Rico, nothing is given. No interest is given, so I am ignoring the SOP piece. I am ignoring the SOP piece. LOP piece, they are coming and saying I have a rent of 15,000 for 12 months, meaning 1,80,000. So my income from house property is day minus 30%, giving me 54,000. Therefore, 1,26,000 is my income from house property. Is my income from house property. Coming to the PGBP piece, people. In the PGBP piece, I have two options now. Either I can choose 44 ADA or I can choose normal. If I'm choosing 44 ADA, people, the provision says it is 50% of my gross receipts. Therefore, it becomes 50% of 47,80,000, which becomes 23,90,000. Option number two is I can choose my normal provisions. Normal provision income is 25 lakhs exactly. Yeah. Okay. So it is 25 lakhs exactly minus 1,20,000, giving me 1,50,000, which is giving me 23,50,000. Now let's check once quickly, people, whether ICI has plus the 1,50,000 or minus the 1,50,000. ICI has, where is it? Minus 1,50,000. See? Yes, ICI has minus 1,50,000, which means ICI has told this is depreciation as per income tax. That's what I said, people. English can make a difference. English can make a difference. Keeping these thoughts in mind, you now need to decide whether which is beneficial. People, which is beneficial? No, on. Very good. Depends on the interest, people. Depends on the interest, because the moment you choose for normal, you have to pay advance tax in 4 quarters, and if you choose presumptive, you have to pay advance tax only in 1 quarter. So this decision is now not being happening based on income. This decision is going to happen based on where you pay less tax plus interest, not just interest, people, less tax plus interest. That would be the line of difference. That would be the line of difference. Before we go forward, any else adjustments? No, no. Which means if I'm opting for presumptive, people, my total income is 2390 plus 126. 23, 25, 16, 25, 16. If I'm not opting for presumptive, it is 24, 76. This is what would happen. This is what would happen. Now I need to start first computing my tax, then computing my interest. People, question does not say anything. Question says ignoring provisions of 115 BSc, I am in normal provisions. Age is given as no given. So assumption age is 2.5 lakhs. People, how to compute tax? For the first 10 lakhs, it is for the balance. Huh? Total, final total, 4 lakh 54,800, totaling tax to 567, 300, 567, 300, adding number becomes 589, 91 is correct. People, round off only happens at the final stage. Round off only happens at the final stage. Don't round off right now. Don't round off right now. You round off the final number, tax plus interest minus payments and all those things. That is what gets rounded off. On the right side, people, taxes for the first 10 lakhs, 1,12,500. For the balance, 4,42,800, giving me a tax of 555,300, adding cess 577, 500, 512. This is my final thing. People, the right side is normal, the left side is presumptive, which means left side will be liable for a 234C at the rate of 1% for 1 month, because I'm in quarter 4 alone. Therefore it is 5,899. Very good. You always round down to nearest 100. It is round down to nearest 100. Therefore, into 1% into 1, number becomes 5,899. 5,899. My total tax is 5,89,991 plus 5,899. Why? They told when they're paying. But April 25 means 1st April also, no? Can be in 1st April. I wouldn't want to do that, but okay. I don't think the answer would change significantly. Okay. Then you have 234B. Assuming she's coming in April and you discharge the payment in April, you will also have an interest for April, which is 5,89900 into 1% into 1, which becomes 5,899 again. So therefore, adding both the numbers, it gets 790. 601,790 is your final tax payable. Final tax payable. On the right side, people, if I'm doing normal, I have a problem. I have to do 234C and quarters. So I'm doing quarter 1, quarter 2, quarter 3, quarter 4. People, quarter 1 I have to pay. Hey, number 86627, which will get rounded off to 86600 into 3%. Yes, yes, number 259. Okay, then 30%, 45%. 577,512 into 45%. 259 880, which gets rounded off to 259,800. Correct? No? Rounded down to 100. It's round down to 100 into 3%. 7794. Quarter 3 is 75%. 433,134, which gets rounded off to 433,100 into 3%. Number becomes, sorry, 12,993. Final number is 577,512, getting rounded off to 577,500 into 1%. On the calculator, it is 5775. Totaling of interest 20. Okay, this is my 234C. My 234B will say 577,500 into 1% into 1, which is 5775. Three numbers are getting added, 5771512 and 5775, adding to 250. 612450. See, interestingly, people, what happened? While my total income level normal is better, my tax level normal is better, but on a total tax additional payment level, presumptive is showing better. Presumptive is showing better, and therefore the answer is opt for presumptives. Answer is opt for presumptives. Yes, sometimes changes can happen at tax level also. One very beautiful question which IC had given in November 2018 has never been tested after that, people, because we generally don't get tested on individual questions. But this was not a question from total income perspective. This is a question more from a chapter called as tax planning, tax avoidance and tax evasion. Tax planning, tax avoidance and tax evasion. A question like this can come in your question number 5 or question number 4. Question number 5 or question number 4, I think give it for 4 marks. They'll give it to you for 4 marks and they'll come and say, give me a recommendation. Questions like these are very common to be tested in exams. Yes, pay attention to these kind of questions, people. This is the comprehensive question in the sense that it's triggering multiple things. Presumptive chapter, normal chapter, interest on both chapters, and then recommendation chapters. Yes, so that is why this question becomes a little critical for you to focus attention to. Clear, everyone? Clear? Yes. Question number 1 is what we have done, people. How many more questions do we have? 7, no? Good enough. We should be able to complete, people. From here starts all your complex questions. From your past exams. So we'll be discussing all these questions when we come back from a break. Yes, some questions we will do it in the paper if we see most of the adjustments are the same. Questions where adjustments are going crazy, we are writing it down also. Yes. Let's have a breakfast break and then we'll come back and do the balance.